Everyone, how are you doing today? Today is the 11th of October 2023, and I'm bringing to you another brilliant chart analysis. And I believe we're gonna see a lot of things to get done from this one. And shout out to all the people that attended the lecture yesterday, or what I call it, a meeting, or whatever I will call it. That was a lot of people, and I appreciate everybody that attended. The meeting, and I believe we'll learn one or two things. And for the beginners, we're going to do something about the beginners, but we're just teaching everyone how to make money from whatever we're doing in the community. Okay, right now, today, what is going on? It's very, very easy. You can see if you look at what happened yesterday, you should all be in profit because exactly what I said is what happened. And I believe if you follow it, it's only yesterday that matters. You can use it tomorrow, you can use it any day, anytime. I bet you're going to be a profitable trader. Now, this. Let me bring in this to analyze the market for us today. Um, we can see right here. We have this happening. I think some days ago that created this spike. Then the market came down. I told you it gave birth to the structure. That's the major structure. And whenever you have a major structure, that means we now have a trend. You understand? So it gave birth to the trend, which is now 1, 2, 3, 4. We have 5, 6, and 7. You can see we're having a downtrend. You understand? A nice downtrend. You understand? So whenever you're having a trend, you need to be careful. You need to always know when to buy, when to sell, because sometimes the market will shoot up. It doesn't mean you need to buy, because that is where is going back to respect the 0.7 Fibonacci or 0.6 Fibonacci. So when you buy around that point, now the market will start coming down back and you lose uh, your money. So yesterday, being on the 10th, we could see, I told you, 3 spikes was created, and that's why we have the movement back up to this point. Now, inside the 3 spike, we have a minor one created again. So we're expecting it to continue the movement, but unfortunately yesterday another spike created itself right here. Let me show you. Another spike created itself, which is 1, 2, then 3. You can see the moment I saw the 3 spike, I knew the market was going to turn around. You understand? Because the moment you have another 3 spike for me here, you'll be waiting for 4 to create, then continue. The moment it breaks the number 2, definitely you need to get out of the market. And that was the reason why the market keeps uh, falling down. So let me remove all this things so I can show you what is really going on in the market. Are we in a downtrend? Yes, we're in a downtrend. There's no doubt about it. But inside a downtrend, there could be what we call uh, a reversal, which is going to be a short time reversal, which is going to be like a buy. So for the fact that you have a reversal doesn't mean it's a buy. You need to always understand that, because you see whatever that is happening in the fundamental world or happening in the whatever, it's always interpreting itself or showing the whole interpretation on the chart. And that's why technical analysts are always the best when it comes to trading, because they analyze the chart and see whatever that's going on. You can see the way I'm drawing the trend. You can see this is our lower low, lower high, lower low, lower high, lower low, lower high. Then we have another lower low. Now we have a breakout right now. You understand? Yes, if you take a trade there, because it's like a minor structure to take a trade. If you take a trade at 27,100, your stop loss must be at 26,940 or 26,900. That's where you need to take a trade. But if you miss this move, because sometimes some of good traders, they wait for confirmation. Confirmation is, yes, we have the buyer coming into the market. Now we want to see if seriously they are just to fake us out, they're going to dump, or we just want to see if they want to mitigate the movement of the structure. And when you look at this movement right here, take a look at from where we have the market breakdown there. The market is back to where 0.618 Fibonacci. So definitely we might see the market turning around there, and if it's not going to turn around, it must create a structure for continuation or come back to mitigate the breakout from here. You see, the breakout from it depends on where it's going to start. The breakout from it, which is around 0.6, so it's still going to fall to around where you get into the market, then create a structure before you get into the market. This is for normal trading, not for small account. Video on small account was done yesterday, and if you want to use small account, I advise you use 30-minute time frame. And when you look at the 30-minute time frame right now, you can see we only have the breakout yet. We don't have the retest yet. So what you need to do, you need to go and watch the video and you can understand what I explained yesterday, and that's what has been happening on this movement down to wherever we is. But back to the today's video, what are we on right now? Do we have a buy? Yes, we have a breakout, which is a buy. If you get into the market at 27,100, fine, your stop loss will be at 26,900 or 26,930. You understand? And when you calculate the risk you'll be taking, it's definitely going to be minimal to about 160. Mind you, this is normal trading for people trading normal account. If you're trading a small account, I told you, like $10, $30, $100 upward, you do not need to take a larger whatever. Rather go to a small, what will I call it, a small time frame like this, let it come back, create what we'll call a small point for you to risk, like 500, like 100, then you can get into the market. But you know, this video is it's generally it's for general traders. It's generally for traders, not just for small accounts. So that's why I'm not really emphasizing on the small account here. I'm emphasizing on where you need to get into the trade. Now, what are we seeing now? We've seen the structure keep coming down. We're expecting the trend coming down, coming down. There's possibility it's going to mitigate 0.6 again over here, or even break above it, because don't forget, this is just a trend from year to year. Sometimes we have the market continue to this point and they must still respect the trend. So we can see the market come to this 27,400 or 27,500 and still come down back because the trend is still there. Do you get what I'm trying to say? The trend is still there, but when you're doing Fibonacci, you need to do the first phase before you move to the whole one, before you move to the whole one, and that's now when you're moving to daily time frame, a weekly time frame, and all of that. But for us that we're retail traders, we like to trade daily or just make money every day that we're trading. So you need to understand it as it's still a downtrend. But do we have a buy now? Yes. Let me give you an example. Yesterday we have a breakout. We call this candle breakout, a reversal breakout, a reversal structure breakout, and at the same time candle breakout. But does it continue? No, it later calm down. Why? Because when you do the Fibonacci, right from where the breakout start from to where we have this movement is at 0.618. So that's why sometimes when the market break, I always tell you, always wait, don't jump into the market, let it be confirmed. But if you jump into the market early at this point, this must be your stop loss. If it doesn't create anything for you, it will definitely create the spikes, and the moment the spikes start coming into play, you know what to do. You need to use the spike to take a trade. Simple as ABC. You understand? If you don't use your spike to take the trade, I bet you're going to lose your money. So let me remove all these things back and focus on today's goal. Today's goal is now we have a breakout. Now we have what we call one over here. This is not a spike. This is now a structure. We have a structure. We don't have a trend here. It becomes a trend when it comes down, break, continue, then we have a trend. We only have a structure now, and the structure has broken out already. You understand? Now, if you don't get into the market using this minor signal structure, I will advise you, please don't get into the market at the top right here. Yes, it might continue going up, but it's risky because if you get into the market at the top right here, the market will definitely come down, or might come down and continue even moving down to the stop loss. And now see how much you're not going to be risking. You'll be risking almost 300 to 320 points. Imagine you have $1,000 account and you buy one lot size. You're already losing 300 to 350. Your account is already gone. You see, so what do you do if you miss the trend? Either you use a lower time frame to take the trade, or you wait, let this movement form another structure or come down to 0.61 or 0.783, then you get into the market. or let it form a structure of 0.381 thereabouts. Is it 381? Yeah, 382 Fibonacci. Let it form it. Then when it's continue to break it, you can get into the market. And when you do that, the this will be minimal. It will be like maybe 100 points. You get what I'm trying to say? It will be like maybe 100 points or 50 points signal that is going to give you. And that's you're going to make good money from it. So right now, do we have a buy signal? Yes, we have a buy signal. But if you miss the entry from here, please don't get into the market. Let another signal create itself, but use a lower time frame to get into the market. We have a buy signal, but is it confirmed yet? No, because this is just a breakout. Sometimes we have a breakout and the market will come down to continue the sell-off. You understand? But now we have a buy signal. If you get into the market at 27,100, that is a good entry. But if you miss this entry, I'll tell you, just wait. Let it come back. Don't worry, the market will come. Even though it likes go up like this, it will come down to give you your own minimal point to get into the trade, and you will make your money. And I'll be dropping more signal in the community. If you've not joined the community, please try and join the community. If you're watching the video on YouTube right now, the links are down in the description. Please kindly support my YouTube channel by subscribe, like, and share the video with other people to understand that this is a different type of chart analysis. This is a different type of ball game. This is a different type of ball game entirely when it comes to charting in trading, crypto, signal, stocks, and all of that. You understand? And I bet you we are going to be a profitable trader. So that's what I want to show you today. No spikes has been created yet. Only structure being broken out. Get into the market at 27,100. Good trade. Don't take profit here. Your stop loss is here. Another structure need to create itself before you can take a profit, except it has reached your set goal of the day. Maybe you have a percentage you trade on, or you have 200 or 300% you trade on, then you can take profit. But as far as I'm concerned, I'm still going to stay in the market because it has not created a counter structure for me. It has not even met my target. When I get into a trade, I'm looking for 500 to 100 points. But if I'm trading a small account, I'm looking for 200, 300 to 500 points. You understand? And when you do like that, you continue to grow your account. I don't want to make the video too much longer today. And I just want to tell you that yes, we have a structure breakout, but we might have a retest and continue. And if there is another turnaround, like what happened yesterday, we have a candle structure breakout, we have a reversal structure breakout. But yeah, do we have confirmation to let it come to continue upward? No, the confirmation was not there because this is where the breakout at. You see, now we're waiting for confirmation. Instead, spikes started happening. The moment spikes started happening, you need to stick to the spike, because the spikes are what are controlling the market. And what are the spikes is the reaction of the buyers and the sellers in the market.